Now I know why the timeline's going. No sound. Sorry about that. Okay, let's try this again. Welcome to the Kendall Report. Before I get into tonight's video, let's make sure that you hit the like button, subscribe, all that good stuff. Also, I want to remind you there will not be a video on Thursday night. I'm going to try to do a live stream possibly on Friday. So let's get into tonight's video. What I'm seeing here is the potential for an increase in the CPI, and not really based on any scientific calculations, more of an intuitive sense, in that the Fed raised rates this recent meeting for a reason, because they already knew what these numbers were long before they knew them before the meeting last week. And I know folks are thinking that, oh, they get the numbers the same time we do. No, they already know the numbers. And if nothing else, they're doing their internal calcs. And I don't know why they'll just call up the other agency and, hey, what's the numbers? So they know exactly what they're doing. And the reality is that what we're probably getting is I mentioned, I think in the last couple of days, what I'm expecting is the Fed's going to raise again in June. This is not over. I know everybody has already done the pause trade, but I think there's a reason why the algos, which I'll show you here in a few minutes, and I mentioned last night, are starting to show a little downside risk here in the markets. I don't see a big rollover, no rug pull, nothing like that, but there is a possibility of some downside here, and I'll cover those numbers again that I talked about last night. Just looking at my notes here, and the other thing that's out there, other than the CPI coming out tomorrow, which, by the way, is expected to be up 0.4, and the year-over-year numbers at 5%. So maybe it's a 0.5, and year-over-year increases a little bit more. But I don't think you're going to get the relief. That could be a big surprise. Totally a guess. No one knows the number. But it just feels like we got an uptick coming, and there's a reason why the Fed's doing what they're doing. I told you last night that I was probably one of the few people around that is actually believes what the Fed's telling us. And I will emphasize again, and I think you're going to see some things over the next several months that will start to come into play, which it's not higher for longer. Okay, that's just a cliche. This is just higher. And I saw somebody talking earlier today, and it was a fairly young guy, pretty smart, on CNBC, just happened to have it on earlier today. Had made the mistake of having the sound on. But the argument was that, the Fed's, that the front end of the yield curve is telling them that the Fed has done too much. And that's not what's going on. They're doing exactly what they mean to do. And there's the whole concept, I talked about this last night, that the Fed funds is being pricing in some kind of decline. That's fine. They can price it in. It's not very accurate. I'd be interesting to see multiple months out what the accuracy is of these so-called pricing in predictions that come from Fed fund futures. And it's just not really a very good measurement. But I'm expecting, like I said, I'm expecting that we're going to see probably another increase at the June meeting of another 0.25%. I don't think this inflation thing is over. I think it's fairly sticky, and it's just going to continue on. And so I think that's all I need to say there. I may come back to that in a minute. Let's go to the debt ceiling. And of course, they had the big powwow over at the White House today. And right after that, I saw a tweet. Obviously, Joe Biden doesn't know how to tweet, but it came from Joe Biden supposedly that I was laughing because Jim Baker and I were talking earlier, and we both were laughing about this happening. And then it came out of their mouth a couple hours later, which was that they're talking about extending the deadline. This has been done so many times in the past that they just extend them and then they roll it over, kick the can down the road. we can't make the decision now, so we'll just extend it, temporary increase so they can do that. And one of the things that they're drastically, the Treasury is running out of money very quickly. So they're going to need to crank up the front end of the yield curve and borrow a bunch of money when they do come up with an increased deal, which I think they will. Most likely it'll be a temporary one, and they'll just float this thing forward until they have to make a decision. I don't think they would float it as far as into next year, but I've seen some crazy things. This has been done like 40 plus times in the past. So this is nothing new whatsoever. And this is very common on what we're seeing here. And especially when you have a split deal like in the House and the Senate, like we do right now. And then that just sets the tone for what we're about to see. So as I've said before, I don't think this debt ceiling is a big issue. I don't see that as causing any major things. And I would fully expect that we will get some sort of an extension or something. Let's face it, McCarthy's a very weak player. He's not going to be able to push this thing too far. Although I will give him credit. He's done a better job as speaker than I thought he would. But this is the big game. So I think no one's going to want to really push this too hard. And you saw all the talking heads, including Janet Yellen out over the weekend telling us it will be a catastrophe if we don't do this. So they're going to do this. We already know the story, right? And why wouldn't they do it? So what we're going to see is just more of that. So the other thing that I want to discuss, the banks are still in the news, but we're looking at some stabilization again. CRE was down 0.43. QABA, which is a community bank index, it was down 0.90. So we're just waffling along, but I think the banking crisis, this quick so-called banking crisis, which I never bought into, is about over. And like I said, we're going to see that fade quickly back to page 40 on the Wall Street Journal. It'll be off it's still got a small ad down in the corner of the front page, but it's really about to move to the back pages here. So for the most part, my expectations are higher CPI for tomorrow, probably some downside surprise. We're looking at overnight really flat, up 450. I think there's a little short covering. We saw a little bit of a rally intraday. Looked like short covering coming into the final hour just ahead of the CPI. So everybody's going to square up. We'll go through the technicals here in just a minute. Just looking at my notes here, I think that pretty much does it. Let's go ahead and shouldn't take long to get through the stream tonight. So we'll get into the Wavetech numbers here. All right, so we'll start off as always on the hourly chart on the S&P. Really, it's kind of a mixed picture here. Looks like we're going to stay somewhat sideways. We could see some downward pressure coming in as we come in toward London. If you look down at the very bottom here, the indicator, the PPM 200 is really starting to roll over. Now, this is hourly chart. So what that means, let me blow this up so you can see this pattern a little bit. This 200 is trying to roll over here, and we should stay right along this 10 and 21 period moving average. But something that showed up here in the last few hours is this downward Fibonacci projection here right now, which is 41.23, 14, and 41.09. So that would break down below this pattern. And like I said, the last 2 days have just been ridiculously quiet and really no ranges to speak of. And we're getting that contraction. I'll show you on the daily charts here in a minute, the contraction of the daily market grid, which typically will suggest that there's a downside action about to come. For whatever reason, it seems to contract and get very narrow, and then we get a breakdown of the pattern. And like I said, I don't see a major rug pull, but I did talk about the 40 handles last night. I'll go through that in a minute. We look at the daily charts here. It looks like right now that we're probably going to look at some action, a little downside, not a lot here, into the London Open tonight. And from there, I think everything will be built around the expectations as we get closer to 8:30 New York time in the morning. And we'll obviously see some type of price spike. We'll find out if I'm right or not in expecting that it's going to be a little surprise on the upside rather than the downside. But certainly there's some decent risk here, but it's somewhat controlled based on the environment that we're in. Let's go ahead into the dailies. So daily had some interesting action that happened here, and there's a Fibonacci target on the upside and the downside, but this is the key thing to look at when you see these. Those of you that have the indicators, when you see the PPM 1 starting to turn down. In fact, if we do a mouse over here, it looks like it wants to get into trend mode down, and been talking about this downward slope 10. You see the dotted white line up here. Let me blow this up so you can see this pattern just a little more clearer. The pattern that we're seeing here is starting to suggest that the 10-period moving average is going to cross through the 40, and that the only way that can happen, folks, is we got to stay under that 10. So right now it's 41.42. We're trading at 41.38, so we're below it right now. I don't see this upside being hit, although with the news coming out tomorrow, a lot of times we'll get that initial spike and then reversal. And that first Fibonacci target on the upside here is up there pretty good. It's 41.99, so another retest of 4,200. So above that, we're looking at 42.52, and then 42.84 is what these green dots up here, those are the projections on the upside. Certainly a possibility, but it looks to me that all the algos are clearly suggesting we could see some downside here in the markets over the next couple of days. The extreme probably is down to the 200-day, which would put us back down to 39.88, put us way down at some of those lower numbers that I talked about just the other day. I mean, in fact, let's review the downward fib targets, which right now are 40.76, 40.27. So 40.76 would be basically a retest of last week's low, 40.62. And if we broke through that, then the next target's down 40.27, 39.96, which lines up with the 200-day moving average at 39.88. So that would slip us right down into that range again. And unfortunately, as I mentioned last night and I talked about in detail, is this sideways trading pattern just won't go away. And we keep getting up there. Every time you think you're going to break out, you don't. I think the VIX is still around 17 or so. It just, there's nothing out there, as I told you last night, that really looks like something that you want to, be bullish or bearish about. It's really still about the trading range. So we'll see what kind of numbers we get, whether I'm right, we get a slight uptick on the CPI and market kicks down. It'll all be about 8:30 in the morning, and we'll all find out together at that time. All right, next we'll cover the NASDAQ. NASDAQ got that same little shot on the upside, got some fib targets. Let's discuss those first, which is 13,572, 13,789, 13,924. There's a slight downtick here being projected by the algos, but the NASDAQ is completely different. And if you think about every headline that we've seen, I would have to say for the last 6 weeks, everything that they called, remember, nobody wanted to own Meta. Nobody wanted to own the FANGs, Amazon, you name it. All of the markets that they've called, if you took the opposite side, you did really, really well. And the NASDAQ, as I've been talking about, this upward slope that we've had here is just continuing to be basically the leader here, and there's still some upward bias here. We're at ppm1 0.29, and that's trend mode, and that value is tracking right now is 13,329. Last trade 13,274. So we're just a bit under there. We're looking at a little bit of downside, but if you look at the algos, especially on ppm1, it's suggesting we're going to stay above that 10, but it is starting to turn down a little bit. So that those numbers are going to be declining. So just use a simple 10-period moving average as the support line. If we get through that, the 21's like right there. We have 13,329 and 13,153 are the two moving averages. Then right there is 13,064 is the 40. So we're clustered all together there. There's going to be good support in this range. It does look like we've got some potential downside here on the algos, but not as drastic as in the S&P. All right, Russell next. Here's the RTY. Interesting, we got new upside projections there as well. So all of the indexes got a new fib targets on the upside. The high targets are fib target 1 is 1780, Fibonacci target 2, 1808, and 1825, pushing us back up toward this 200-day. And it, like I said, this has been in a slightly different configuration. And I just I'll come up and want to cover something. I've been talking about the mid cap and the small cap being where the opportunities are. I still believe that, even though that like I just talked about, the tech stocks are still leading the way. The larger cap stocks in the NASDAQ still are very positive. But there's some really good stocks in there. Including in the Russell. Not only are there good stocks, but there are good bank stocks in there that have substantial patterns and fundamentals that are behind it, that they're not going to decline. So just like I said, if you would have faded all of the news that sucked everybody into being short and the end of the world coming, and all of these stocks were going to remember, the earnings were going to be off, everything was going to be off. And I think right now, and this is a memory number, so I didn't research it to detail, but we're looking at, I think, the Russell at 10 times earnings versus the S&P at 17, and the mid cap I think is around 12, and those numbers stuck in my head. I'm pretty sure they're close to right. So the value is in there. It's just finding which stocks are best. And I would tell you that the best way to find those of you who have Wavetech, just go ahead and look at those ranges, and the screens that we put out every month will also help you to identify fundamentally some really good stocks, especially we have a small cap screen and then a mid cap screen as well. So just be watching for those numbers. But the bottom line is this entire pattern that keeps unfolding is just more sideways. The algos are suggesting on the ppm1 that we're going to come back in, so we could retest the 10-day moving average that right now is 1755. So the reality is we can't get out of these ranges that we're stuck in on all of these market indexes. And as I mentioned last night, the name of the last night's stream was, what will break us out of this sideways pattern? And it's very difficult to find anything at the moment that's going to do that. I don't think any part of a disaster or catastrophe that Janet Yellen was talking about is being priced into the markets from the standpoint of this debt ceiling situation. It's just a non-event, and they're going to play the same old games. As I wrote down a note, let the games begin, because that's what's going to be going on with that stuff. But I still see opportunity in mid, small and mid. The mid is acting actually much better. I've shown you that before in the past, and it continues to be a little better versus the NASDAQ from that viewpoint. But the bottom line is there's some really good opportunities. So look for some good ideas there if you're looking for stock ideas. Next, we'll cover the 10-year. As I've been talking about back a few days ago when we printed all the way down to the extreme, we rallied back and we're back above the 21 period moving average again, and here we are printing 352. I was talking about 355 is the 200-day moving average. So expect to see the markets come in there, and ultimately we get sandwiched between the 10 and the 40, maybe the 21 and the 10 and the 200, or the 21 and the 200. So we get into this range, that's roughly going to be 345 up to about 360. We'll round off. So there's not anything, market's just going to continue to consolidate here. The one thing that is being shown here, which is interesting, is that the 10-year algos are turning down. So it looks like right now that there's a possibility that we can get back under the 10 and maybe challenge the downward side of the market grid. And so we're just looking at that pattern from that standpoint. But I don't see anything really big there. Let's take a look at the 2-year. 2-year back into the moving average. I've been talking about that. Algo's suggesting we're likely to come back in a little bit. Look for the market grid to hold up there. The bottom end of the market grid is probably going to be around 387, 388. And on the upside, we're looking at around 420 or so on the upside. Yesterday, we were able to print up to 402, just above, back in that 4 handle. I was talking about that several days ago. We're there. It doesn't look like anything drastic is going to happen here. The PPM, the interesting thing down here where PPM 3 is, the algo is staying pretty positive, which suggests we are likely to stay above the 40 period moving average, which right now is right at that 399, 400, 4% area. Next, we'll take a look at crude oil. Crude oil has also rallied back like I was talking about. It's doing pretty good. We're seeing that the 10 period moving average is about to turn up, and you're starting to hear a little rhetoric around the possibilities of the SPR being bought back. I don't think they do anything right now, and I think maybe the oil traders are a little more optimistic, but it looks to me from just a daily, I'm going to go to a weekly just to review that for a minute, but the algos are all suggesting that we're going to continue back into these moving averages. We've got a big pivot number up here at the 76, 77, right at that level, but we should get into resistance if we can trade back above the 21. Right now, it looks like 2 or 3 more days of consolidation. We should try these moving average values here, the 21 and the 40, somewhere around that 73, 73.50 level should be the areas to watch. All right, so the next, we'll look at the gold. Gold continues to climb the 10 period moving average. We're still positive. We're at 0.21. So in this particular configuration, as long as we stay above 0.15 on ppm1, we should see market remain above the 10-period moving average. And we do have these downward targets. I discussed them. 2004, these are new actually, 2004, 1972, and 1953. So there is some targets, but there's still quite a bit of positive upward slope here. And it's more pronounced on the weekly chart, but the support numbers are a bit lower than where we're trading right now. So it looks like we're leaning toward possibly testing the 21-period moving average at 2018. We get through that, then the 2000 level, and then we could hit these Fibonacci targets on the downside, which once again are 2004, 1972, 1953 on the downside. I think most likely the extreme in this pattern, 1970 would be a big move relative to the pattern. So look more for the 40-period moving average around 2000 to hold, at least for the next several days. Final market is Bitcoin. We continue to see this daily chart start to decline. We're heading toward this Fibonacci target here. The target there is 28,431. Hang on, that's the wrong number. Yeah, Fibonacci targets right now are 27.5, which that's where we're trading right now, 27.7. The low is 27,641. And the next target below that, 26,995, and then 26,939. Yeah, so 26,595, 26,039 is the targets here. They're embedded here. These targets that are right here are no longer valid. There's some really tight targets here. So look to the market grid from that standpoint as far as some support. But this is the chart that I've been really looking at, and it's suggesting we're about to get a decent rollover on the Bitcoin, and we could see a pretty decent decline, maybe back down to 24.5. Could get to this level around 25,700. I'll just round off 26,700 as far down into this 40-period moving average on a weekly, which would put us all the way down at 21.8. That would be your extreme. But I think we hold right around the 21 period, which is 24,900. I'll just round these numbers off. But we're definitely looking at this thing rolling over. We're testing the 10-period moving average right now. We get through that, then look to the 21 SMA weekly. Okay, folks, that'll do it. Sorry for no sound at the beginning. One of those things happens. Anyway, thanks a lot for watching. I appreciate everybody that's showing up every night, and we're going to keep going. And just remember, Thursday night, no video. So I will see you possibly on a live stream intraday on Friday. But I'll let you know on Thursday night via Twitter whether that's going to happen or not. So have a great evening. Hit the like button before you leave the door, and we'll get there as soon as possible. Let's see here. Yeah, I'm just looking at a couple comments before I go. Yeah, hopefully on Friday, if I do a live stream, I'll be able to interact with you folks, and I'll pay attention to the chat line. And so anyway, folks, thanks for watching. We'll talk to you tomorrow night, same time. Have a good day trading.